All right, let's just take a quick moment to discuss top-down time frame analysis, top-down, right? So since we're scalping, we're looking at the 15-minute time frame, the 5-minute, and the 1-minute, right? So in a 15-minute candle, you have three 5-minute candlesticks, right? So these are our three candlesticks. We have 1, 2, 3, right? So what does that mean? We're saying price opened and went higher, right? With a strong bullish candle, and then price attempted to go higher but fails and closed bearish, and then we had another bearish candle, right? So that means our 15-minute candlestick will probably have a small bullish candle and a long wick on the top, because price opened with a strong bullish candle and then it got rejected and it reversed a little bit. So we will have, since price did not reverse all the way down, as you can see, we still have a bullish candle. If price had came all the way down, then this whole candle would have been a long wick, because price would have reversed all the movement, all the bullish movement. All right, so if we go on our 15-minute candlestick, we should have a body and the long wick. All right, and this is our 15-minute candlestick, right? So if we go on our 5-minute time frame, right, as soon as that 15-minute candlestick closes, we now know that price is most likely going to push lower, right, to retest this low before it can go higher. All right, so why are we expecting it to go higher instead of all the way lower? It's because the price closed with a bullish body. The body of our candlestick is bullish, meaning that there is still bullish volume in the market. All right, if there was no bullish volume in the market, then price would have continued to go all the way lower. But since we have bullish volume in the market, price rejected, will go to retest, reject, and then go higher. All right, because it has to retest the previous low. And we can agree this is a previous low. As you can see, price was going higher but got rejected and it left a wick, and this wick is a range of its own. So you have a body range and a wick range. All right, so price came down, it retested, and then it continued to go higher. So how would you have taken this trade, right? You would have gone on the 5-minute time, on the 1-minute time frame. Let's go on 1-minute time frame. All right. All right, so this is our 1-minute time frame. All right, so what do we see? You would have taken your trade right here. You see, price went all the way lower, so you would have waited. Either you would have placed your buy stops, all right, your buy limits. All right, it's easier to just place your buy limits right there. See, this was our high and it got rejected. Price went lower and then it continued to go higher. All right, so since that was our previous high, you would have pressed your buy limits right over there. Okay, if you don't want to place your buy limits, then you would have waited to see if price is going to reject, and it rejected the first time, and then price came down to retest, and then you have a second rejection. All right, so since price rejected the second time and it made a new high, that meant price had now even more chances of continuing to go higher than lower. Because if price wanted to go lower, then we should have seen price rejecting the high, rejecting this high right here, and pushed lower. However, price did not. It created a new high right here, right? Which meant that price was only going to create a new lower high and then continued to go higher. You can even see price came back down and took out the stop losses that were there. So price rejected, first signal, retest, right? Price retested, and then you have another bullish candle, and that's your confirmation for price to go higher. All right.